Okay, so if you have a daily, the breakout starts with H4. Sorry, the storyline starts with the breakout of the H4. So meaning H4 starts the daily, right? So if you go one time frame lower H1, what does it start? It starts H1. Sorry, it starts H4. But you can have the breakout entries. Remember, guys, we talked about the breakout entries. The same thing here. You can have the breakout entries on H1 time frame on a daily level, but where is your TP? It's going to be at H4. Why? Because the storyline that we start with H1 breakout is going to be H4 storyline. Let me just explain that real quick right here. So you have an M15 level, and the breakout should be on M1. M1 breakout, pull back to your engulf. Okay, your entry is always on the engulf or the QM or the last resort. Since you're on the lower time frames, it doesn't really matter. They're so close to each other, like just 1 pip. Okay, so pull back and then take an entry. Where is your TP? M1 breakout. What storyline does it start? It starts the M5 storyline. Okay, so you can find an A level on M5. We don't work with gaps here. Okay, we don't work with gaps. So the M15 level that you picked should be either QM, an A level, or a V level. It's not a gap. Okay, it should not be a gap. The same thing for the M5. So the M5 TP is going to be an A or V level. It's not a gap. So price is going to go to that M5. Now here's the thing. If it rejects TP, okay, just TP. If it breaks, what do you do in this scenario? An M5 breakout, what does it start? An M15 storyline. So you're gonna hold the trade to M15. Okay. The same thing goes on if M15 breaks. Where do you hold it? You hold it to the M30, right? If M30 rejects, then you TP. Okay, it's very, very simple. You can take an M1 entry, holding it to an H4 level, simply because all the previous A levels on all the other time frames broke. So yeah, that is it. Do you guys have any questions for now? If everything clear, let me know if so in the chat. I want to hear from all of you guys that it's clear or not clear. I can always re-explain. Okay, Wahid, what do I repeat? What did you not understand? The whole thing or a certain thing? Okay, it's very simple. Pick any time frame. H1, okay? Let's go with H1. You drop 2 time frames lower here. What's the first one? M30, second one, M15. M15, right? So breakout on M15, pull back to an engulf, take an entry. So M15 breakout, UTP at the time frame that is between the level and the breakout. So if the level is on H1, the breakout is on M15, the TP is in the middle. That's simply it. Okay, so you can rewatch the video later to understand more in details or in deep details. Okay, that is simply it. So now, okay, this is today's trade using the Euro USD strategy. Okay, so the Euro USD strategy is also good for prop firms. I personally treat prop firms with storyline using DC, continuation, and Euro USD engulf. Besides that, I use the engulf breakout pullback entry, ECMTF, and the breakout entries on the personal accounts to flip accounts or to make a small return on a single trade per month, because I have big accounts where I just make 1 to 2% a month and then stop on that account and work on the small accounts to increase them to be on the same level of that account, and just do the same thing in the future. Because the point of you trading in this market, guys, remember, it's not to have all the skill set in here. I can look around the whole internet, get every single strategy that no one heard about. But at the end of the day, you just want to make money, right? If one indicator can actually make you money, or if 0.5 RR can make you money, why don't you just do that, right? So the point of all of this is to give you a proper edge and a proper way to look at the market and not make it hard for yourself. So I'm teaching you all of this to actually find your edge. Backtest every single entry of all of these that I taught you, because I simply don't trade all of them every single day. I pick one today, I pick two tomorrow, I pick all of them after tomorrow, but I have the ability to be very, very flexible. So yeah. Someone asked me, what's your minimum amount for a personal account? Well, I personally have flipped accounts that had less than $5, so I guess there is no minimum amount for it. But yeah, so here, let's take a look at Euro USD. So for Euro USD, you have certain rules. It's very, very simple. You can have an entry on London session and New York session. Okay, so you are kind of waiting for time here before you enter. You can't enter at any time like SNR on gold. So, but you're gonna have less entries and higher quality, okay, and higher RR trades. So the way you do that is very simple. You have a daily candlestick, and you should mark the high and the low of that daily candlestick. Why is that? Because these areas are considered reversal areas. So price tends to go and take that daily high or take that daily low and reverses, right? So that's what price does. That's the first type of reversal area. The second type of reversal area is on Asia session. So price moves on it in Asia on a choppy price action. So you tend to take the high of that session and the low of that session, right? And wait for price to take one of them and then reverses to the other one. That's what price does on the same thing here. Takes the high, goes to the low, right? Or takes the low and goes to the high. Now, if you have both, let's say the daily high, daily low, Asia high, Asia low, how do you know which one is going to be taken or both of them are going to be taken? So is price going to take just the Asia low and then go up and not taking the daily low? Or is it going to take both and then go up? Now here, it really depends. If the kill zone, basically the London session started, because right after Asia, you have London, okay? If this low of Asia or this low of the daily got taken in London, that is valid. But if Asia finishes, there is the Frankfurt here, there is a gap where nothing starts, then the Asia low and daily low got taken. That means in London, what's actually going to happen, price is going to go lower. Take that one more time before actually going higher, okay? But how do you know if it's going to take just this one and then go up? If there is an engulf just below Asia that is fresh and it hits in London, okay? If it hits in London, just know that this daily low is protected and it's not going to get taken. How do you mark your engulf in Euro USD? So the last bearish move before, the last bearish candle before the up move and the last bullish candle before the down move. So this is the up move. This is the last bearish candle. This is your engulf. Now, how do you know if it is fresh or unfresh? You look where price went outside of it. So here, where did price go out of it with a body closure, not a wick? So here it went out of it with a wick, not a body closure. Body closure is on here. You ask yourself, did price action ever came back to this engulf after the closure? Now here, it doesn't matter if it is a wick or a body. If it did come back, which in this case it did, then it is unfresh and you can't use it in the future. Now, if it didn't come back to it, then it is basically valid for use. That is how to mark your engulf. If you find this engulf below Asia and you don't find it below the daily low, for example, that means that London session is going to take that engulf and just go up. It's not going to take the daily low. So I'm going to show you an example here, how I caught the sell. So I went to the daily. What you always do is you mark the previous daily high right here, and you mark the previous daily low right here. The second step, you go to the M15, mark the Asian high right here, the highest point of Asia, and then you mark the lowest point of Asia. Then London opens, right? London opens. What did London do? It went down, took the Asia low, then went up. Did we have any engulf for a buy right here? No, it simply reacted. Did we have any engulf above the Asia high or sell? Some of you might tell me this, but look at it. Look at this. It is unfresh right here. Price went out with a body closure, came back. Same thing with this, right? Look at that. Same thing. So the engulf is always going to be on M15. If you can't find one M15, just go to the M5. Now, before you go to the M5, also check above the daily high. So if you go above the daily high, where is your next fresh engulf? This is not fresh simply because it got touched right here. Okay. This is not fresh. It got touched right here. This is not fresh. It got touched right here. This is fresh. Okay. So you're going to execute that trade only after London. When London opens, you have the permission to take trades. As you can see here, price tapped into that engulf, and then you put your stop loss here. Your TP, okay, your TP, in this case, logically is the previous daily low. Okay, because when price takes the daily high, it's more likely to go and take the daily low. But you also have to be flexible. Now here, the time that we took this trade was good. It went down, but then the volatility was kind of ending. So I know when London closes near, it doesn't have much volatility to finish all of this. So think logically. Do you think price is going to take all of that at London close? No. So you better close your trade after it took the recent low. So you can look at this low right here. Price took that and simply TP there, right? Because I personally know from my experience that price can't go to the previous daily low since it's right here. But for long term, you can take the risk and put your TP there. So that can be 15R. But for today, I was satisfied with 5.54% on my account. So that could be today's trade. If you're not satisfied with the RR, you can always refine lower. So from M15 to the M5. So you go to the M5. As you can see, M5 is up there. In this scenario, you would not have been tapped in. So 3.9 pips for me is valid. I only refine when the pips of the stop loss or the engulf are more than 7 pips. Okay. So here in today's example, we hit this engulf after London finished and before New York started. Some people would tell me this is invalid, but sometimes you can be flexible and take trades outside of the kill zones when they're between. Why is that? Because that's the only engulf that is closed and I only have in this area. Is there any other engulf, guys? Take a look. This is unfresh. This is unfresh, 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 unfresh. Nothing is fresh. Not even here. Everything is unfresh. The only valid zone for me is right here. That's the only respectable zone. So you think I'm just gonna not take it because of this? Okay, maybe when you have a very solid plan and you don't want to miss it out. But from my understanding, it's more likely going to react for me because that's the only engulf in this whole area that is fresh, right? So you can cheat sometimes when you understand what's going on. So yeah, you just be flexible, guys. Yeah, so the original TP is going to be right here since we took the daily high. So the target is going to be the daily low. If price reacted from an engulf just above the Asia high, then your TP is going to be the Asia low because price goes from a reversal area to another same reversal area, from daily high to daily low or from Asia high to Asia low. Okay, guys? Yeah. Now, what is the CE, right? The last thing before we wrap up our session, the CE stands for consequence encouragement. It is the 50% of something or anything. I'm gonna show you an example where I took it, yeah, right here. I think right here or previously, but yeah, let me just take a look. Yeah, it was right here. It was right here. So first of all, you gotta find your normal entry pattern. So you mark the daily low, you mark the daily high, you go to the M15, you mark the Asia low, which is right here, and you mark the Asia high. So what did price do? Sorry, the Asia high is right here. Okay, what did price do in London? In London, it took the daily low and the Asia low, so it's going to the daily high, okay? And it reacted from this engulf. So you can see that this engulf is too big on M15. If you take a buy right here, stop loss right here, TP on the Asia high as your first TP is going to be 1.55 RR, okay? It's only going to be 1.55 RR. So what do you do in this scenario? You either refine it down to the M5 if there is any. In this case, there isn't. I think there isn't. Let me just confirm with you. So here, okay, there was an M5. Okay, you can take an entry there. Okay, it would increase your RR to 3.38. But how you would use the CE is simply by going one time frame higher until you find a big wick. Okay, and that big wick has to be bigger than the body of that candlestick. Let me repeat that. So here we are on M15, right? We have a big angle. So you can go up until the daily, okay? Until the daily. If you find the wick in this zone, first of all, it has to be bigger than the angle. So if you find the wick on the higher time frame, say M30, do you have a wick? Yes, I do here, but is it bigger than the angle? No. Let's go one time frame higher. H1, do you have it? No. Let's go to the H4. Do you have it? Yes. Now look at the whole wick. Is it bigger than the body? Yes, it is bigger than the body. So what you would want to do is you go to the refined engulf. You go to the refined engulf and take the 50% of it. Okay, the 50% of it is by Fibonacci, and then you draw your line, and boom, that is your entry. Your stop loss can be maximum at 2 pips, okay? But I personally go with the 0.7 on non-spread accounts, and for spread accounts, I go for 1.1, okay? That can give you a high RR trade, but this example only occurs, let's say, very rarely, okay? Very rarely. But the other example of the CE is when you don't find any wicks on M30, H1, H4, you find it on the daily. The 50% here is not going to be at the engulf. It's going to be at the wick of the daily. Let me repeat that. So if you find the wick right here, okay, you're going to take the 50% of that wick. You're not going to take the 50% of the, basically, the engulf. So boom, something like this. The wick on the daily, 50% of the wick of the daily. You're not going to take the M15 50%. That is it. Please watch the recording. There was a lot of information in today's classes. I want you to master all of this. You'll be a beast. Okay, guys, you're gonna be a beast after this. Well, hopefully. About the timeline theory, it's not going to be taught today since I'm still working on it. I'm gonna basically teach it to you when it is ready to deliver. Okay, so in a week or two, I'm gonna let you guys know.